Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you like and subscribe. And as always, let's jump right into it. So today we're actually talking about how to analyze a options trade using Thinkorswim. So let's take a look at SPY, right? So right now SPY's at 295 even. 295.50, right? Give or take. But let's say we think over the next couple weeks, the price is actually going to roll over. We're looking at a 1 hour chart, okay? And we think at least we could come back to maybe here over the next few weeks, right? Which might be a potential gap fill, right? At the 286, 285 level. Okay, and of course, if we break this, then just doing some basic technical analysis, right, that would probably land up right around this 284 on any type of a pullback, okay? But what this trade does is it gives us the ability to be wrong for a period of time, but then kind of become right, meaning price could still go up. Okay, from here, hit 3,000 on the, or 300, and then reverse and come down over the next few weeks to maybe a month or so. So that's kind of what the trade essentially would be. And again, this isn't a trade recommendation. This is more how to analyze the chart and all that. So we know our level is around our target level. Think of it this way, right? And what we're going to do is we're going to do put spread. And let's say our target level is around 285 on SPY. Okay, that's about 10 points lower over the next maybe month and a half to 2 months. So we'll come over here. We'll click on all products, type in SPY, right? And let's go out to the July contract. That's 55 days, so about a month and a half, maybe a little more than that. So we're going to look at the July 20s, right? And let's look at the 290, 285. So what we're going to do is we're going to go to the ask because we're buying this put spread, okay? And then what we're going to do is we're going to come down here. We're going to change the lower put, the one we're selling, to 285. Net, this trade's going to cost us about $1.53. Okay, it's a five point put spread. So our reward on this trade, if at expiration it falls, we're correct on the trade. Just take 5 minus 153. So what is it? That's 347, right? Total profit. Not bad risk reward if we are correct. Once we're at this page, what you want to do is come over here, right click on your mouse, and then go to Analyze Trade. Once you do that, it's going to take you to this screen, right? The Analyze and the Risk Profile. Once we're at the Risk Profile, me personally, I like to drop this down and change it from day step to 4. Okay, and what this does is it gives us this little box, and it gives us how much everything's going to be worth, give or take, on a specific date. So here, the best way to read this, right? Here's our plus money, lose money, right? Remember, it's a put. These are the strikes, right? Or the price of the stock, higher, lower. That's it. Very simple to understand. These are your standard deviations, right? Levels. And then right here, what we have here is just a, what you call it, where the exact price is as of right now. So if we're looking for 285, which is going to be about right here, okay, we could look over here and we could see what the price would be. So if we bought the spread for $1.53, right, and price drops 10 points to 285, well, on 531, we'll say the trade we should make about $69 worth of profit. If by June 21st it's here, right, so it takes a little longer than we expected, what we paid $1.54 would be worth about $85, right? And that's showing you on the, June 21st, right? Now, if we want to increase these levels, just come up to the step, right? And let's just move it by, like, we'll say 12 days, right? Even, let's go 13 days, right? And we'll go back here to the 285 level, okay? And we could see that by, like, July 2nd, we'd be around $100, okay? 101 on July 2nd. On July 15th, it'd be about 152. And then if it closes below, okay, by, let's see if it does it. Yeah, this is beyond. Okay, so we're not going to see it here, but we know that by expiration, if we're below 285, that the whole put spread will go out for max profit. And we could see, now let's say all of a sudden we hold it longer, right? There's a big flush in the market. We're back at 270, right? By the middle of June. June 19th, right, is $219. So that's all, it's over 100%, right, risk reward on the trade or profit, that we could say, hey, let's take our profit, okay, or if by 7/15, July 15th, we could see way up here, which is the July 15th line, right, this trade should be worth about $342, right? So this is a really helpful tool. This is, honestly, you can get really complicated with all this. I try and keep this as simple as possible, right? Let's just kind of keep it, hey, here's the spread. If I want to go to 280, I could change it, right? And let's go back up to the 12 steps, right? And well, now we have a 10-point spread, and let's say we're at 280 by within a couple weeks, okay, we need to unlock this guy right here to get a new debit, 282. But if we're at 280 by, we'll say, June 5th, okay, we're at 207, right, worth of profit. Remember, this is a 10-point spread, but if at expiration, right, coming up towards expiration, we're at that 280, right? Now it's worth about 480, and then again, given another day or two going into expiration of July, okay, expiration 55 days away, we'll have a max profit about $700 if we are correct on this trade. So I hope this helps for understanding how to use the Analyzer tab, trading on Thinkorswim. And if you guys have any questions, make sure you leave comments below. But as always, thank you for watching. And until next time, we'll talk to you soon.